Today, let's talk about China. We all know about China so much that we come across Chinese products at least once a day or if not more. So, China has been one of the rapidly progressing countries in the world for the past few years, but recently there has been some very serious issues going on in the property market of China that led to its crisis. So, before we dive right in, welcome back to my channel where we will cover some interesting financial news across the globe. And a subscription to the channel would be so great because it will make me happy, of course. So the story started a little more than a year ago when one of the biggest property developer in China called Evergrande has notified that they have a huge debt of $300 billion and also that there is a tremendous pressure in their cash flow. Yes, you heard it right, a debt of $300 billion. And this happened mainly due to a policy change by the Chinese government. So back in the days, the property market in China accounted for around 20 to 30% of their overall GDP, which is much higher compared to other larger economies. This was because the country's policies regarding constructions has favored a lot of the developers, and all of this ultimately led to a huge bubble in the property market of China for the past 2 decades. So developers, in confidence of this huge bubble, were basically pre-selling homes even before they were constructed and put in that cash to buy new land and started new constructions to make sure the cash flow is consistent. And this confidence finally found its way to a disaster. The very recent decision of the president of China, Xi Jinping, to put down lending money to developers puts a needle into this huge bubble of property market. This decision disrupted the cash flow of the developers and they were unable to complete their existing projects since they spent that money for it on to buy another set of land and constructions. And this is where things started to take a turn. As people who bought those unfinished houses started noticing that the development has come to a pause, they marched to campaign and refused to pay mortgages until the house was delivered to them. There are about 2 million homes that are still needed to get finished, and if this number continues, the confidence of new buyers will get affected and the market will fall much deeper. So in short, the property market of China went from a wow to a woo in no less than a year. Seeing the situations getting much worse, the property crisis which started off by Evergrande has come to a point where the Chinese government is willing to throw $200 billion to save the drowning market. But reports from S&P 500 says that they need at least 800 billion or more in the worst case scenario to pull the market up. The Bank of China has also cut the 5-year loan prime rate by 1.5%, which is the highest cut in history, and some local government has even started lending money to property developers to continue the constructions of unfinished homes. But as the situation continues, people started losing faith in the government as well. The current crisis and repeated lockdowns due to Beijing's zero-COVID policy has affected people's hope in the property market, and it is assumed that the Chinese people will move their 127 trillion yuan from the property market into other markets. The property crisis in China has also affected other industries as well, especially the cement industries. The global cement output was off by 8%, and this was due to a drop of 15% of cement production in China as the housing construction in the country dropped down by 40%. Other industries like metal and iron industries has also taken a huge hit. Not only that, the internationally traded yuan fell to its weakest point recently since 2008, and the dollar has reached its all-time high after the Fed's hawkish decisions to increase the interest rates. The main reason for this is due to the decision of the Chinese government to ease the interest rates to revive the growth in the economy that was fallen due to the current crisis and repeated lockdowns. On seeing this, the Chinese government has set their local banks to sell off as much dollars as they can and to stack up as much yuans as possible to put a floor under the yuan, which lost more than 11% to dollars so far this year. But the Fed is projected to increase the interest rates to 4.4% by the end of this year, and the value of dollar is projected to rise again. So the Chinese government should have to take more efforts to compete against the rising dollar, and that is something we should all wait and see. So that is all for today. Thank you guys for watching. If you like this video, please hit the like button and subscribe to the channel for more financial contents around the world. Have a nice day.